Saudi Arabia really, really, really wants to raise a couple $1 trillion, it looks like. Or at least, I don't know, a couple $100 billion from selling a 5% stake in what is the country's arguably only industry. Why didn't they do this a couple years ago?
Well, when there's a couple things going on here, and I'm not going to delve deep into Saudi Arabian politics because
Nobody knows.
I don't know that very well. But as you've seen, there's been some rather vocal commentary coming out from the kingdom. Some of not the king, but some of his
various princes are saying this.
Are trying to get away from oil. We need to move away. They're trying to build this massive, basically sovereign wealth fund where they can start to wean themselves off of oil. And one of the ways that they want to raise money to get this fund off the ground is to IPO a certain segment of Saudi Aramco. Now, it's pretty modest here. They only want to sell about 5% of the business. And granted, that 5% is a lot because it's such a big company. But from an investing standpoint, it's going to be listed on the New York Stock Exchange, so you and I can buy it just like anybody else. But before anybody gets too excited about this, and I'm sure there's going to be a ton of media like, should you buy Saudi Aramco when it IPOs and all these things. Right now, we don't even know what the heck we're going to get. Like they said, we're going to 5%. Does that mean 5% of the whole thing? 5% is just these certain segments of assets. We don't have the slightest clue what that necessarily means.
That was the most interesting part about, I think it was the Wall Street Journal article that I read the other day, and this was titled, Saudi Aramco IPO could be 5% of value. And as you said, value of what? The most interesting thing that I read was they're not even sure if they're going to include the country's oil reserves. As I understand it, the country is structured to where everything's the property of the Saudi royal family. So it seems to me like they could do whatever they want with all this stuff anyway. So I'm almost inclined to say, give me the refining assets and you keep the oil. I don't know.
It's one of those things again too, where you're looking at a business that is trying to serve two masters. And what we have seen, at least in the oil industry over the past several years, a company that's trying to serve two masters like that in the terms of being a hybrid of a state-run oil company and being one that's publicly traded where it's beholden to returns, those can be conflicting things. And I think a great example of that is Petrobras in Brazil. Never mind all of the things that have gone on with the kickback scandals and the corruption and the things that have happened as of late. But if you had watched Petrobras at the early times, it was, we have this immense opportunity because we have these pre-salt fields. They're huge. We need to raise some capital. And they wanted this hybrid model where they could raise the capital and generate returns for investors over time. The only problem is that there were so many restrictions from the state-run side where it's like, well, you still need to subsidize gasoline prices within the country, so you're going to automatically take a loss on those. You have to have certain local content restrictions, so you can't be the most competitive on price all the times when in comparison to an oil major. And when you have those conflicting
contract out to just Brazilian companies,
right?
When it's all.
So when you have those conflicting interests, it can be very, very difficult to balance that. And if you look across, Petrobras, PetroChina, even Sinopec to a certain degree, it's very hard for a company to serve both of those masters well and to have everybody satisfied. And so, yeah, sure, Saudi Aramco might make 5% of it available. Is it going to be a great investment? It's really hard to tell right now.
The odds are low, yeah.
Don't go jumping in the minute you see it.
Right.